of coffee.
So I've got Nick Gibbs here. And Nick, you know what? Every once in a while, you see a headline that is just captivating, that you can't take your eyes away. You're like, what in the world? And this headline was on StockTwits. Do you follow StockTwits at all?
I used to. I
You,
have since become less of a degenerate. So,
less of a degenerate. Well, okay. Let me just read the headline here. Author Randy Kirk sees one move takes Tesla stock past 500.
what?
What?
That's a hell of a headline. Tell me more.
He says, anyway, no, I'm not going to read the rest of the article because it was directly out of my show. And so therefore people need to watch the show if they want to know what I say. I thought that was a captivating headline. What did you think?
Yeah, I'm captivated. I'm gonna hang up here and go watch that now. See you guys later.
All right, let's talk about what the substance was, though. You've said the last couple of days you think Tesla is ready for a move. I think you've said it could be February, it could be March, it could be April. I think you were, probably right about that. But am I right? Can this happen? Can this move happen without a significant number of robotaxis without safety riders? Or is that really what's going to have to happen before the stock moves?
Um, so great question and good to see you, Randy. Again, keep in mind when I said that we were right at 400.
Right?
Um, so pretty prescient, if I do say so myself, as we
Right.
sit here at 423, or 425, excuse me, and a
25?
little bit up
Yeah. Yeah.
in the I need to grab my glasses. Um, so yes, I do think that we can move higher. I'm assuming you're referring to the last video I just made and posted. Uh, am I correct? Is that what you're referring
It
to?
was either that or a post on just a regular post. But yeah, it was probably the video.
Yeah. So in that video, what I was saying is it seems to me like Tesla is ready to rise and rip, but it has really nothing to do with Tesla themselves and everything to do with Wall Street. And so my thesis is that no, the safety drivers, it's part of the story, Randy, but the compelling part is that Wall Street wants to see profits and revenue in AI. And Wall Street is struggling to understand that we are seeing return on invested capital right now, but that is not in an easily measurable way. So right now, where we're seeing it is in productivity, which is objectively obvious because everybody and their mother are coding in some way, putting more papers out there, making more videos, just putting out more content. More production is happening per individual.
Right.
Productivity is going up. And that's not even talking about what people are doing inside workplaces. And then on top of that, every single company is in the process of disrupting themselves by using LLMs and agents and higher levels of automation internally at their companies, right? But that is very difficult to quantify, especially when a company looks the exact same, but you don't see all the things they're changing on the back end to be able to deliver a better customer experience or removing certain features because there's no need for it. For example, if if a company had a huge overhead to be able to deliver very good reporting tools to a client or to their end user, but now that end user could just say, "Make me a report about XYZ," and it just shows up. Well, now you've just been able to deprecate a bunch of code, a bunch of UI that you didn't have before. All that stuff's really hard to quantify. Wall Street's not good at quantifying the difficult, which is, they like it simple. They like, Tesla, tell me how many deliveries you're projecting. Okay, when? Okay, how? All right, what's the cap? Right? They want everything spelled out for them. They don't do any critical thinking. So that's one part. The other part that they seem to not see, and I swear I'm getting back to Tesla, so bear with me.
Uh-huh.
What they don't see where AI return on invested capital is happening right now is in advertisements. Look at Meta, look at Google. They are able to deliver ads faster, more directed, more targeted. People are able to build ads quicker, more cost effectively. And Meta, Google, Amazon, all these companies are able to give a better return on those ad dollars that companies are spending. That guess what happens when you get better returns on your ad dollar spent?
You
People spend
spend
more on
more.
ads, right? So it's a virtuous cycle that's happening. So that's where we see it happen right now. You're seeing productivity, which is a big deal. That is return on invested capital because now Randy can have 10 employees putting out the work of 100 employees, and he didn't have to hire another 15 employees to get that. He got to do it with the same 10 employees. Plus advertisement, we're seeing it there. But my kind of crystal ball says that the next leg for that realization of AI profits, return on invested capital,
Mhm.
other than the infrastructure side, because we see how that's going, right? That's pretty obvious, will be autonomy. That seems to be the very clear next thing that's right ahead of us. And I think Wall Street's going to eat that up because it's so easy for them to quantify that. How many robo taxis? How many miles? How many cities? How many are you adding? Times how much you're charging, minus your overhead, which is like nothing. Easy math. Wall Street loves that. So I believe with what we're seeing right now in Austin, more and more unsupervised, what we're seeing with the roadmap of what cities are going to come out, we are going to see Wall Street eat this up. And they're going to love it. And they're going to be all over it because they're finally going to be able to quantify the return on invested capital when it comes to AI. And so this is why I think Tesla can move higher very easily, very quickly, and not necessarily need to see it in the balance sheet just yet as far as these astronomical numbers. But I think Wall Street is foaming at the mouth to see some results. We saw Google, Amazon, Microsoft, Tesla, Meta, all of them essentially increased their capital expenditure forecast by 50% to 100%. All of them. All right. These companies clearly see something. Wall Street doesn't get it. Wall Street is looking at a 1 quarter to 1 year at max for the craziest analysts out there, maybe 18 months out. These other companies are long term thinkers. They see what's happening and they're not going to let it go by. So I'm of the opinion that we have a mismatch between Wall Street's timeline and their ability to do homework on ROIC, return on invested capital. And I think Tesla is going to be the very clear beneficiary of this in the next couple months, if not sooner. That's my
Okay.
thesis.
So it doesn't sound like we're very far off then. Basically, you're saying robotaxi is going to be the stimulus, but it's going to stimulate even beyond Tesla because then they'll be able to see all of AI as opposed to,
No,
oh, you're saying
I
just
think
Tesla
I
benefit.
think Tesla I think Tesla is going to be the only one that'll be able to clearly see.
Okay. So that'll kick it past 500, right?
I don't know where it'll go. I can't predict that.
Yeah.
I don't know if it happens quickly. I don't know if it's a slow, steady march, but I do think that as it becomes more and more obvious and Tesla actually delivers more and more consistently, that's what's going to happen. There's a reason why Tesla is essentially the strongest Mag 7 company you've been seeing as of late. Like this isn't a coincidence in my opinion. That's not to say there isn't a really big X factor out there that can deter all this, which might be happening in the next couple of days. But there, and I do think there's one big risk, which is what I talked about in my latest video. But Tesla does seem poised to be the one. The only other companies that I think could benefit from this would be the NVIDIAs, the Microns, the cloud companies, essentially the infrastructure that surrounds AI, because that's kind of the easy play right now.
Right.
But easy doesn't mean bad. It's just a very obvious play. I mean, you
Right.
see like NVIDIA and Micron. Again, I talk about this in my video. People, if you don't understand how it works, these GPUs need to have these memories. Okay. And I do this because that's kind of what they look like. They're like DIMMs. Okay. So these GPUs need this memory. It's called high bandwidth memory. Without this, these GPUs can't do anything.
Right.
All right. The GPUs, we know there's been a bottleneck. Everyone wants them hard. They're all sold out, right? We all know that. But now the bottleneck are these HBMs, high bandwidth memories.
Mm-hmm.
They're sold out for
Mm-hmm.
all 2026 into 2027. So we see where the clear bottlenecks are. And these companies are printing money. And all we're seeing is this continue to go down the chain. So first it was the GPUs. Now it's the memory that goes with them. The cloud companies, we're already seeing it there. The electricity, we're seeing it there. So these are kind of the easy, obvious plays that I think have been very underwhelming lately. And I think they're also due to have outsized performance, especially when you see the capital expenditure that
Mm-hmm.
all these companies just announced.
Right.
And none of these companies have really moved. Where do you think all that money is going? It's some of this seems so obvious, so simple. And I'm telling you, we are setting up for a massive, massive run in a lot of these companies.
So Elon Musk, of course, on that subject, Elon Musk has been all over the news. I think right now there's nobody getting more headlines. As I go through the news every day and look at hundreds and hundreds of headlines that don't have my name in it, the other name that's in there, the name that's in there the most right now, I think, is Elon. He has been between his what do you call it, uh, uh, interviews where he's been participating, between his statements that he's been making on X, between all the news that he's made in the last 8 days since the announcement of the merger. It just goes on and on. So, but in that is the solar thing. And solar, of course, is part of what you're talking about here, is that we're going to run out of energy. So how are we going to get more energy? And so he's like taking it upon himself and going to build a solar fab and or expand the existing solar stuff in Buffalo. Morgan Stanley had a note out on that today. Did you have a chance to take a look?
Yeah, something about like 20, 30 billion, right?
Say, yeah, 20 to 30 billion, which is kind of a drop in the bucket. I asked Grok whether they thought the numbers were right. Grok said yes, Grok thought the numbers were right. If you're going to spend 20 to 30 billion,
Oh,
then
I thought it was in market value. They would
yeah,
add 20,
no, but
30
I'm
billion
saying,
market
yeah, but then also it's about the same on the spend, is
value. Oh,
about anywhere from 20, they said up to 70 billion on CapEx. But I'm thinking, well, maybe Elon is pretty sure he knows how to do it for a way less.
I mean, if there's one person that can do it, it would be Elon. But just I would just say take it all with a grain of salt. Because it may be way less in what period of time after what type of scaling, right? So we'll see. But again, if there's a person that could do it, it would be him, especially if he is hell bent on it.
It is kind of interesting. What I keep really being, I don't know, flummoxed by is that Elon raises his spend for next year at Tesla from 10 to 20 billion, and everybody goes, and then he raises 20 billion on the market for XAI, and then he's going to raise maybe 50 billion for the combined XAI and SpaceX. And those numbers are still a fraction of the 200 billion that a couple of other companies are spending, and the 100 and change that the third company. I mean, how is Elon? And by the way, he's totally even with these guys in terms of the leaderboards and whatnot, and what he's putting out.
So yeah, so again, you got to parse it out a little bit because the big ones that are talking about spending are Microsoft, Amazon, Google, right? Those are the big ones. You can throw Meta in there as well. A lot of what they're spending isn't just for their own consumption and for their own training and use. a lot of it is for their cloud business. It's for other people to use, for other people to rent out. So we don't really know what the breakout of that is for their own self consumption. We
Mhm.
don't know how much of that is for DeepMind, for example, within Google to do training. We don't know how much is it for Microsoft. We don't know how much of it's allocated to OpenAI or Anthropic. So, I wouldn't bucket all into the same bucket. Whereas when it's talking about Tesla, that's all just for Tesla.
Right,
None of that is to rent out to others
right,
to make money,
right.
right? So just a little detail there.
That we know of, because it does turn out that XAI has been renting out space, or renting out content, or they are starting to monetize that Memphis facility. That is not exactly reported news,
Yeah,
but
say I don't know about that,
but
so I don't want to.
Larry Goldberg said it on Friday, and I think he has the right sources, but for some reason it hasn't made the news yet. Um, so the Morgan Stanley report, and then we have the merger. Everybody's talked it to death. Larry had another big article about it today on uh, uh, on on X. Did you happen to look at his analysis today?
I didn't even see it come up.
Oh, okay. Basically, he's just saying what we've been saying since Friday when he and I talked about this, and that is, look, the companies are going to be whatever they are. If there's a merger, it's going to be wherever they are, they're going to be, and the values are going to be there, and the bankers are going to come in and they're going, this is fair. And then the board's going to say, yeah, we agree with the bankers, this is fair. And whatever it is, if it's fair, then there's no dilution. The dilution I see, and Larry didn't bring this up, the dilution I see is if Tesla shareholders feel that Tesla's growth is going to, in profits or in cash flow, is going to be double SpaceX's for 5 years, then the Tesla shareholder might feel, it seems like we're giving up too much. But if it could be the opposite.
Sort of. So okay, so here, let me just steel man the other side.
Okay.
The argument would be if Tesla is standalone
Mhm.
and they're printing trillions, right, or
Right.
hundreds and hundreds of billions, whatever, pick your number.
Mhm.
Compare and it's just against Tesla and Tesla expensive, Tesla's cost,
Right.
Tesla's expenditure going out. Then that's a lot of cash being stacked up. That's just for Tesla, and that makes Tesla on its own a more valuable company.
Right.
All right. So Randy with $1 million is a lot more valuable than Randy married with $1 million because
Right.
Randy married with $1 million. Well, now that $1 million has to be to
Right.
support two people, not just himself.
Right.
So if all that money is coming in for Tesla and now SpaceX is coupled on there and SpaceX is kind of a leech is the wrong word, but is kind of having to have life support off of everything Tesla's doing, that's kind of the drag that I think people feel. So
I think you just said what I just said, that
sort of
if the
because
stockholders feel that the next 5 years is going to be all Tesla with lots of free cash flow and not so much SpaceX, then that would, and they were roughly even in terms of CapEx at the time of the deal, then that would seem, I think it's exactly the same thing you just said. Yeah.
no, but the problem is what that does to the stock because seeing that type of revenue being brought in and profit being brought in on a $1.5 trillion company
Right.
will move the stock and make a more
Right.
valuable company
Right.
versus that amount of revenue over a $3 trillion company not as valuable, right?
Right.
So
Right.
I get the argument,
Yeah.
but I think in my opinion, it's short sighted and it's missing the bigger picture. I personally would rather be part of a company that is dominating autonomy and now has a monopoly on space.
Yeah.
Like
Yeah.
personally,
Yeah. Yeah.
I'd rather be in that company.
Together. Yes.
Yeah, so it's a difference between short-sighted point of view, which I'm not saying there's something wrong about being
Yeah.
short-sighted,
Yeah.
like some people are just in it for a very short time. and that short time might be
Sure.
5 years, right?
Sure.
Like maybe like, hey, 5 years, I want to be there for robotaxis, the ramp, and I want to get out into something else.
Mhm, mhm.
That's fair. That's
Yeah.
completely fair. But I think I think that's not your average investor in Tesla. Your average investor in Tesla is actually an investor in Elon.
Right.
And so I think most people would be on board for this. Even most firms, most funds, Wall Street in general, I think most people would be in favor of this so that they could get a piece of SpaceX.
Mhm,
So
mhm. Yep.
we'll
Yep.
see. But I understand the point of view and I understand where some may be frustrated, but at the same time, I think it's a bit manufactured.
Well, and a lot of people haven't done the deep dive into SpaceX because if you take the deep dive into SpaceX, each satellite that they put up is already generating over $1 million in revenue. I'm sorry, $1 million in revenue. And the new ones are going to be big. The new satellites will be bigger. They're faster. I mean, they're going to be generating more than $1 million per satellite in the future. So it's going to be a huge, huge business, especially if Elon gets to 1 million satellites.
Yeah. Well, remind me, what's your take right now? Do you think they're going to merge? Do you think something's going to happen?
Yeah,
When?
as fast as possible, but it's going to take a while. It's not going to be something he can just snap his fingers and have a debate with himself about doing it, like like he could with the other. He's going to have I think he'll have regulatory bodies that'll be interested in it. You'll have to get both boards. You'll have to get the stockholder vote. It's going to take a minute. But I think
Do you think it happens this year?
the announcement will be made this year after the IPO.
Okay, so you do think SpaceX will IPO first?
Yes, before they
Okay.
announce. Before they announce. That's just me. I don't know. What do I know?
Okay.
I had a
Yeah.
I had a really good new reason for why they should do this merger the other day, and I'm forgetting it now. Oh, I know. I mentioned it to Larry. He was kind of on board with it. The idea is right now, the way things are setting up is that some people are talking about a fight between the two companies over Elon's time.
Oh, yeah.
And so if it
I
comes together, then that's no longer a fight.
yeah, I mean that's a there's no fight for his time. I don't think. Especially even if they came together, it's the same problems are there. It's just how we divide things up is irrelevant. Like that doesn't the way the companies are divided, I don't think dictates his time of where he spends his time.
Yeah, yeah. Well, especially if you're working 100-hour weeks. It's as
Yeah.
he says, if you really, really want to get rich, work 100 hours a week every week and never take vacations. We have a new product coming out maybe any day because the specs just came out yesterday. And today there's talk of somebody of Electric, who I never quote, of Electric maybe uncovering the price of the semi truck.
Oh.
So Electric says the standard range is going to be 250,000. That's what the Tesla's quoting right now, and that the long range is going to be 290,000. And this is not on the website. Being a commercial transaction, it may be that they'll never put the pricing on the website. I don't know. Although they do put the battery prices up. So anyway, what do you think? If these are the prices, you think this is going to be a pretty good seller?
Hmm. I I think probably you would imagine so. It just depends on the infrastructure and the like I don't think it will be very popular for long haul. I could
Mhm,
be wrong,
mhm.
but for inner city haul, I think it'll be very popular.
Yeah, well, like Pepsi, I think, their point to point is like 150 miles or something, so it's like a perfect
Yeah.
run. Tesla running between Reno and Fremont. So these will be easy calls. Anything under 500 miles should be an easy call. One of the things, though, somebody made a point to me is that even if it's a long haul, what do you do when you're doing a longer trip? Do you wait till you're down to 5% and then pull in, or do you top off just so you can finish the day and then fill up in the morning? I mean, I think that's what the truckers will do. If they think they need 15 minutes, they'll slip off the highway, take their 15 minutes, go to the restroom, grab a hamburger, and hit the road.
Well, sort of. That I mean, if you've done any like extensive research into like how truck drivers actually function, they don't like to stop.
Right,
So they can they have to stop after 11 hours. So
right,
they can only drive for 11 hours. They don't have to be consecutive, but essentially 11 hours. And they have to be able to split it with breaks or whatever. But essentially, they will pack lunch, overbuy food at a stop so they have it, so they don't have to stop, and they'll pee in buckets and cans and bottles. Like that's what they do.
yeah, okay,
So
yeah. I just my thinking is you can make up whatever 50 if you have to take 15 minutes to gas to put your charger on because they'll fully or 80% charge in 30 minutes. Both specs came out as I think 80% in 30 minutes. But if you even whether you top off or whether you go the full 30, you're going to make that up just on the uphills.
yeah, yeah. I think I forget what it is, but I think they're allowed to go 8 hours consecutive and 11 in a day. Ah, man, it's been a while.
Yeah, yeah,
Um, it's something like that. So, but my point is, so even if they go just at, let's just assume my numbers are right here, 8 consecutive, they also like how long does it take to charge up, right? So that's the other thing. If
right.
I can fill up faster than I can charge and not have a drag, like again, it doesn't sound like bad. It's like, okay, we can only drive 11 hours in a day anyways. So if you split that up, charge for some time or whatever. But the problem is when you look at it over the course of a week, you can lose a day if charging takes longer. So that's where I think like it kind of starts to maybe get imbalanced for the very long people going cross country.
Mhm.
But I don't know. I haven't done research into that part of it. I just have, for some reason, no all knowledge about truck drivers and schedules and that they pee in bottles. But for anything, I think the vast majority of truck driving too, though, happens like within like 100-mile radius in
It does.
general.
It does. Yeah, yeah, yeah.
Yeah. So
Lots and lots of point to point, lots and lots of harbor to distribution center. There's all
yeah,
kinds of regular, these little short runs. Yeah. And even the less than truckload stuff, like you're saying, in the city where the truck's just picking up 27 boxes here and 20 boxes over there and
yeah,
and then takes them over. Yeah, yeah, yeah. Okay. And by the way, I do think that the stock could get a little bit of a pop if Tesla announces that the FSD is ready for the semi.
that won't be the case.
It won't be the case.
They will not announce
They
that.
won't announce that. Okay. All right.
No, FSD ready for semi. No, they
Yeah.
might have like assisted features. They're not going to have FSD ready for it.
Okay.
They
All
don't
right.
have the data for that.
I
I'll put any amount of money on it.
no, no, just a bookmark. Just a bookmark.
Yeah, put a bookmark. Yeah, that bookmark's is gonna have a lot of dust on it because it's never gonna come back up.
Reuters says that Elon is stepping down as the international sales manager. Well, that's not what they actually said, but that's what actually happened. So, Elon appointed himself international sales manager. Actually, I guess it was Europe and the United States, not China. I think that's correct. But he has named the head of European operations, Joe Ward, to oversee the company's sales globally. And the move follows the departure of Tesla's head of North American sales, Raj, go ahead and pronounce that one, Jagannathan. Anyway, so
You
uh,
tried.
Yes. So I was, you know, that I'm the biggest fanboy ever of Elon Musk. And I attribute to him at least, I got a book up here in the Elon Musk method that attributes at least 17 superhuman capabilities, superpowers. I don't think running a sales team is one of them. I just don't see it. But maybe I'm
On this one,
wrong.
we agree.
Okay. So we'll see now. Maybe Joe Ward will be able to take over and really, get the sales up in Europe and the United States. And of course, we just talked about it over the weekend that why wasn't Tesla in the Super Bowl the same way that SpaceX or that Starlink was regionally based in the Midwest where they don't have, the big sales yet, pointing out the safety benefits, pointing out the savings, pointing out the price. Just the price alone would have been
Yeah.
something.
Yeah, I look, this is I think a very obvious misstep by Tesla to to not go all out on this. I've said my piece on this over and over. Um, I think it's borderline criminal that they don't. I think it's putting a lot of. I think a lot of kids will lose their lives because Tesla does not overly communicate how safe their product is, how safe FSD is, and it's unfortunate because I it's where I see Elon is the biggest hypocrite is the fact that he wants people to have more babies and worry about population decline. Yet he's got the safest cars in the world with the safest software in the world, and one of the every year either number one or number two top reason why toddlers die is car accidents.
Yeah.
So to me, I don't care if you don't like advertising, if you really care about humanity, if you really care about population, if you really care about this and it's important to you, put out some ads. At least the Super Bowl. But I mean, maybe he knows something that I don't, and that's so obvious. But to me, when it's something that crazy, you do even the things that you think might not work because what's the worst thing that happens? You save a kid's life. That's
Right,
worth it.
right.
Just my opinion.
Yeah. So then Reuters says this is an interesting one. Just breaking. CEO Sam Altman said the model, his latest model that just came out, is the first to hit the high risk category for cybersecurity on the company's preparedness framework, which is an internal risk classification system that they use for model releases. This means, according to Reuters, that OpenAI is essentially classifying the model as capable enough at coding to potentially facilitate significant cyber harm, especially if automated or used at scale. And an AI watchdog group, the Midas Project, is claiming OpenAI failed to stick to its own safety commitments, which are now legally binding under California law with the launch of a new high-risk model.
Now that's a person that knows how to sell. He knows how to sell. Sam Altman is desperate. He is absolutely desperate. He's lost so much talent. That talent has gone and formed other companies, joined other companies, and frankly, they're falling behind. They are going to struggle to raise money moving forward. They need to build out more. They're trying to strike up partnerships everywhere they can. But damn it, if the guy can't create some good headlines, he knows how to hype his stuff up. Our stuff is so good that it's dangerous. Get out of here.
All right, let's talk about the economy. First 3 months of the deficit numbers are in. The question is, how is Trump doing at managing the federal government in terms of receipts versus outlays? And it turns out that in the first 3 months, the number last year was $711 billion deficit, and this year it's 602 million. So that looks to
That's
me like a substantial savings.
not bad.
Not bad, huh? And it's 602 for 3 months. That would still be over. No, that'd be three times. Yeah, it would not reach two trillion. So it'd be under 2 trillion if they can keep that up. And we haven't even got into the big
Tax
tax
season.
when all the money when the huge money comes in. So anyway, I thought that was a pretty good deal. Do you think that'll get any headlines?
No.
No.
I mean, do you? Did it?
No.
I saw nothing today about that.
No, there was nothing.
Hmm.
Nothing that I could find anyway. Yeah. So, and I'm going to guess that that's mostly tariffs because that would be, they're talking about like 30 trillion a month, I mean, 30 billion a month in tariffs. So that would be, there's a little more in there apparently than tariffs, but it might be largely tariffs. But at least it's in the right direction. And hopefully he will get some points from somebody for that. At least I'm giving him points.
Yeah, there
Um,
you go.
GDP now dropped its Q4 estimate to 3.7%. That's still a great number. If it turns out to be 3.7, nobody will be sad. But it is far down from the 5.4 that we were all hyping a couple of months ago. So, what do you think? Do you think there's let's talk about a couple of other numbers though, too. Retail sales in December were flat. The number of layoffs in January was the highest in, 4 years or something. Go ahead.
Little nuance there.
I'll turn you loose.
Yeah, just a little nuance. It's not the highest layoffs. It's the highest announced
Layoffs. Yes.
layoffs,
Yes.
right? So these layoffs haven't necessarily been
Right.
recognized
Right.
in the jobs numbers yet. So
Exactly.
we don't know what that's going to look like. But what you're referring to is the I forget what it's called. Um,
Yeah.
something Christmas report.
Yeah.
Yeah, okay.
Yeah.
Well, it's a report.
Yep.
uh, but it's the announced layoffs,
Right.
and even that it was like 100 something thousand, and you gotta parse that out even more, right? A big part of that were actually already announced by Amazon. They announced they're going to do 32,000 layoffs. They did 16,000 back in October. They did another 16,000 here in January, and then still related to Amazon, they broke up their contract with UPS. So
Right.
UPS had a lot of layoffs that they announced, right? So pretty much about half of all that 100,000
Mm.
came from Amazon slash UPS
Mm.
related.
Mhm.
So again, this is where a Challenger report, there we go,
That's
came to
it.
me.
That's it.
That,
Yeah.
yeah, the Challenger report. So, but again, these will be reflected throughout the year potentially, or over January, February, and March is when they get recognized. So you'll see them in the numbers, but there's always a little noise before you get to that point.
All right. So, one of your favorite conversations is about housing. One of my favorite conversations is about inflation. And looked this morning a little deeper into the true inflation numbers. And if you add up the housing, which is dropping by 1%, and you add that to the food, which is dropping by 1%, you add those two together, you're talking about 50% of the CPI is dropping by 1%. So I went even deeper than that, and I looked at utilities, which is another 14, no, 14%, 11%, no, I can't remember now. But it's another big number. It's also now dropping. I'm sorry, it's now only up 1%. And clothing, which is a much smaller percent, dropping. So overall, I think that their number, when they're thinking it's around 0.65, I think it was this morning, that sounds like a realistic number if you've got half of it actually deflating. Is the Fed going to pay any attention to this trueflation information? I mean, how can they not? It's clearly driven by the real numbers.
So that's a really good question. It's it seems like they're not. It seems like they don't care about it. Let me sit up for this one a little more. Let me explain to people if they don't know. The Fed uses the BLS, right? The BLS, when they calculate CPI. They're looking over a data set of about 80,000 different products. And the way they get this is they have people go out and survey stores. They have people cold call people. Let's take housing, for example. They'll call up about 8,000 people who own houses, and they'll just ask them, hey, Randy, how much do you think you could rent your house out for? All right, really? You think that's how much you'd rent? Okay, great. And that's what they use for the number to see how much it changed, right? Only 80,000 points, and then it's delayed by 30 days.
Right.
Compare that to Truflation. Truflation uses over 15 million data points compared to the 80,000. Truflation looks at Zillow, House.com, right? All these rental websites. They partner with Walmart, right? They're Nielsen. They're out there with actual companies, and their data is real time.
Right.
Okay, so if you take the pulse on that, there's even if there is a flaw somewhere with Truflation, you would probably put your money on Truflation being more accurate than the BLS. It's real time, a more than order of magnitude of more data points, and they're partnering with actual companies. They're not just doing random surveys for random people and seeing what those random people say. Furthermore, when it comes to the housing part of it, Truflation only puts in a weighting of about 23, 22% into their numbers.
Right.
Truflation currently has inflation, I think, down to like 0.6 something.
Right.
All right, maybe 0.8, somewhere around there.
No, 0.6 something. Yeah.
Okay. If you were to change the weighting that Truflation does for housing to be equivalent of the BLS, it'd be down to 0.4 something.
Right.
All right. So this is substantial. And historically, from the Great Depression through the 80s, through the dot-com bust, through 2008, into COVID, and even into 2022 and now, the Fed is historically late.
Right.
So to me, the big risk, and this goes back to what I was talking about with Tesla, the thing that could interrupt, even if they are going crazy banana with autonomy and everything's looking great, there's nothing you can do that will disrupt a late Fed and deflationary cycle. It is a negative virtuous cycle that happens. All right. If we have deflation, if people think that, hey, things are too expensive, it's not a good economy, all these things, people start to pull back. As people start to pull back, they start to spend less. When people spend less, then businesses, guess what they do? They produce less, right? Because there's no demand. So they have to reduce the supply. When businesses reduce the supply, guess what? That means they don't hire as much. If they don't hire as much, eventually they start laying off. If they start laying off, then those people who are laid off, they start selling stocks. They start selling their crypto. They start pulling cash out to sustain their lives. And it becomes this negative cycle that has everything shrinking. With the Fed keeping rates this high right now, when let's just assume for a second, even if you don't believe it, assume Truflation is correct, this is a dire warning signal right now. Now, even if you don't think Truflation's right, they're at, if they use the same metric as BLS, 0.4. If they keep their own weighting for housing, they're at 0.6. CPI is saying 2.8 to 3%. This is off by a mile,
right?
By 10 miles. So this is the risk that I think we have in the market right now. It's not any geopolitical stuff. It's not tariffs. It's not something Elon's going to say. The risk is a huge mistake by the Fed. And I don't know what can happen. So your question is one of the most important questions right now that nobody is really giving it the due respect it needs. I'm not saying people aren't talking about it, but it seems like the people who are actually banging the table on this are on YouTube.
Right.
And it's frightening because if we get into a deflationary tailspin, this is substantially worse, as you know, than inflation.
Right.
We don't really have good tools for this because the Fed tends to be too late.
Right.
So I not to go on a long rant there, but people got to start talking about this. Like,
yeah. So then the flip side of that, or the other side of that craziness, and I've spent a lot of time over the last few days talking about this because I love demographics. Somebody else put up a post today. I saw them and said, why doesn't anybody pay any attention to demographics? It's all right in front of you. So we've got we're 4 years away from more deaths than births. We are already in a situation where we have more people retiring than we have 18-year-olds coming into the system. And we've got the AI happening, which is, one way or the other. Different people think different ways as to whether it's going to increase jobs or decrease jobs. But some people think we're going into a super strong economy, which is going to create a job shortage, if it's that strong. And we've got a big mismatch of jobs. That's one of the other big parts of this is that the people that are graduating from college right now, they've taken all the classes in how to run the DEI department, and they haven't taken any classes on how to do manufacturing. And we've got other mismatch. I mean, there's jobs out there. The small business people were out this morning with their NFI, National Federation of Independent Business, NFIB report, and the small businesses are optimistic. They're saying things are going along. They're okay. They're good. They're making money. So the Fed is sitting there though with this stranglehold, and I just wonder why do we see this and they don't? That we need to. Oh, and by the way, here's another one I've been forgetting to mention. Shipping is up. Shipping is up for the first time in like 4 years. People are starting to buy trucks again, and the shipping is getting the prices are going up because there's a shortage of enough trucks to do the work. That's usually a very big sign for the economy to pick up. And then finally, I'm sorry, I've been going and on and on. You're gonna have so much to talk about. Is that tomorrow we're going to get the jobs report. And it's going to be between -20 and +40. That's my statement, which is going to be less than anybody thinks. And I've been saying it for months. It's going to be always going to be between -20 and +40 because the people have gone home. They're back in Nicaragua and Colombia and Mexico. They're not here anymore. And so that's the number we're going to be dealing with. And the market, fortunately, the Fed is probably too stupid to realize the reasons, although he did mention the immigration in his last talk. But they're going to look at this and this is finally going to be the thing that makes them move, is not the inflation from trueflation. It'll be the low numbers and the jobs numbers. Anyway, you're up.
Yeah. So let's see if I can hit all of that. So luckily I'm not too worried about the birth rate or the 18-year-olds and people retiring, all that. And we're probably one of the few countries that can say that because we are a country people want to come into. So population wise, we will be fine as a country, but things do have cycles, right? Everything has a cycle. And the same way the baby boomers, were a generation of extreme numbers in size, these things go through cycles. So I don't think that's too big of a concern for the United States, at least. Again, there's more people that want to come here than don't. And luckily, some of the smartest, most entrepreneurial people in the world want to come here.
Right.
We're as much as everyone says that we're such a bad country, we are still the worst country that nobody seems to want to leave once they're here. So that takes care of that. As far
What you're
as
saying is we can turn the spigot on again in terms of the increasing the number of immigrants that we have coming in.
correct.
Right.
As far as the Fed, and don't they see it with, less people here, less immigrants, legal or illegal? I think they do see it and they see what's happening, but you can almost not blame Jerome Powell for not wanting to do too much right now. He has essentially been known as the guy who screwed up seen inflation, was way too late, kept printing money another 3 months after we were at crazy high, and then had to essentially chemotherapy the market with the fastest increase in rate hikes of all time. That's his legacy.
Right.
Until, to be honest, recently, since I guess the end of 2022, where he actually has done a pretty good job at blocking all the noise of all the people telling him to stop raising rates, stop hiking, start cutting, start cutting. He has been more right than wrong over the past, call it 3 years.
Mhm.
All right. He has. Like, I don't think you could really argue that because a lot of people wanted rates to be cut a lot sooner than what he did. So I think you have to give him a little bit of kudos for that. And now, as he's right there, 5 yard line, not only just to get to 2% through the BLS metrics, but also his exit.
Yeah.
We're in February. His exit's what, May?
Yeah.
3 months. That's it. And he's done. He's out of here. If you were in that situation, you probably also wouldn't want to rock the boat right now. You wouldn't want to do anything to put it over. At the same time, you don't want to screw it up.
I know.
You're right there at the end. But I think legacy does matter to him because it's not about what he did before. It's how he ends. That will be his legacy. So I do think he cares about that. I do think he thinks about that. And we have seen rate cut odds increase for April.
Okay.
So all that just to say let's see what the data says. Let's see what the job numbers look like. I do think it'll be a positive jobs number, but I think it'll be a weak one. I think it'll give everybody what they want. The Bears will like it. The Bulls will like it. Everybody will be able to rationalize their own argument. You and I will be, same, no different. We'll come on here. We'll say our piece about what we think and why it aligns and why we're right because of this and what other people are missing. We'll play the game as well. It's not really a game. It's just everyone sharing their own opinion.
Yeah.
So we'll see. But CPI will also come out on Friday.
Right.
I might be rushing the gun here. So between that and the jobs number, it'll be an interesting tension that we have, right? This never-ending battle between the Bears and the Bulls will continue, or one side will dominate for a little bit.
Right.
Now, I'm of the opinion that there's a good chance CPI comes in late. And there's a good chance that the jobs number is neutral enough that this market starts to recover from this scare that's been having, right? So, frankly, I'm hopeful. I want that to be the case too. Like, I have no reason to believe that's going to be the case. But if trueflation is true, you would think that the BLS, even though they may be late and lagging, should really start to reflect that.
Right.
We should start to see some meaningful drop in the CPI over the next, starting with this report. So that's kind of my take.
Yeah. So my question for Jerome Powell, Jerome,
Randy,
what are you afraid of? If you drop the rates, who does it help the most? It helps small business. It helps regional banks. It helps commercial real estate, and it helps durables, including cars. It seems like those are the categories that need the help. It's not, unfortunately, going to help the housing market. That's a completely different mortgage thing. It's a completely different thing, but it helps those other categories, which have been the beaten down categories. And it just seems like there's no downside. We're not going to go back to inflation because he lowers the rate by 25 or 50 basis points.
Well, I guess if I was Jerome Powell, I would argue that, we haven't actually seen a lot of change in home rates. I mean, they have moved down a little bit, but nothing substantial. And we control the short term. We don't really control
Right.
the long
Yeah.
end.
No, that's what I'm saying.
So,
Durables, cars, commercial real estate. I mean, that's kind of stuff
and,
that,
and even with cars, right? A lot of these companies have been slashing their rates already. So, you know, it's not really a rate story there. This might be something he would argue. But I think he would say that he just needs the data to prove out, right? He's going to be data dependent, all that stuff. That's why I think you'll get more of the same when he eventually speaks again. But the market will speak louder, and the longer that we go without any rate cuts, I think the more that Warsh will come in and do a bigger cut than is expected, or at least petition for it, because we'll see if he'll have the votes.
right, right. So I believe that Tesla, I said this 2 weeks ago, and the reason why Tesla went down and now back up, in my opinion, was the market. It was all, in fact, I think you posted one day, it was totally the macro. I think, wasn't that you that said that?
Oh,
Yeah.
yeah.
Yeah. It's
Well,
100% the
that's
macro.
all of this.
Yeah.
This and I love sell-offs like this. When it's the entire market, it's beautiful. It's got nothing to do with the company.
Yeah.
It's just the market.
Yeah.
And the market is fearful of some boogeyman out there.
Right.
And when that happens, to me, it's like, look, you got to be careful because the market can be irrational longer than you can be solvent, as the
Right.
saying goes.
Right.
But those are your opportunities to get into some good positions and get into some good trades or to dollar cost average or whatever. Those are your opportunities to do something,
Right.
especially when it's not company specific.
So I feel like Tesla should be at 440. I just think that's the right number for it right now. Don't ask me to explain exactly how I come to that number. I will say that it has to do with my belief that all the run-ups to 480, 490, et cetera, the three times we've had these big run-ups, it's always been about robotaxi. That's my
Mm.
thesis. Yes, the S&P inclusion was part of the one, but it was still about robotaxi. And the last one to 490, whatever it was, that was about robotaxi. So I don't think we can, as I started off the show, I don't think we can get back there without robotaxi. And I think 440, 450, 440, 450, that's where the stock, that's its natural level right now in my thinking. So today we got most of the way there. We're back to 425, and in the after hours, still about 425, 425.90. And unfortunately, I was only my dry powder, the rest of my dry powder isn't coming till tomorrow and later this week and Monday. So I guess I'll be buying it on the upswing here. Oh well.
Yeah, we're actually up to 426 right now.
Yeah.
You gotta get Robinhood.
Ah,
Um,
that's still 425
anyway,
on mine. Okay.
um, yeah. Look, we're kind of w- we had a really nice bounce off of those lows into the high 300s, 387.
Right. Right.
Um, clearly everything was very oversold. I do think that we can run here a little bit more, but to your point, that 340 area, that 338, 438, 440,
Yeah.
uh, that's actually kind of that's a resistance now. That's a big resistance for the stock now. So if it could get there and hold up there, that would be very bullish for the trend.
Okay. All right. Bonds down another I'm sorry, another 0.4 basis points in the early going. At 41, I'm sorry, at 4.14. So you may remember that I was always looking for 4.15, and it should have never gone to 4.26. And I think you're agreeing with me that it was the Japan unwind.
Yen carry trade.
Yeah,
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 and that's not over either. You know that.
yeah.
So don't think that's over.
Okay.
Um, yeah, all this. I said this at the end of December. We made a video and I talked about the January. Actually, I called it the first quarter hiccup that
hmm
seems to happen every year,
hmm
and we've definitely been in that. We from the whole Greenland stuff to yen carry trade to once again AI bubble. it used to be that companies spending capex was a good thing.
Right.
All these companies are reporting great earnings, but the second they talk about increasing capex because they're seeing really great success, they get hit. Um, More China drama, more drama everywhere. Government shutdowns, like all this stuff has happened. We've had a lot of what in the past you'd call black swan events over the
Right.
last 6 weeks.
Right. Right.
And the market has, I think, held up to all this very, very well. So I think if we can get through this week unscathed, and like I said, jobs number be neutral enough that everybody gets what they're looking for, and CPI to show that we're not increasing with inflation and that we're making a march back to 2%. I think this market has room to go. I mean, the S&P 500 wants to hit 7,000. It wants to.
Right. Or go through 7,000.
Go through.
Yeah.
Yes.
Yeah. 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 Okay. We've got oil still hanging out in the same area, at your preferred area, $64, $63. Good place there. Natural gas has come all the way back down to $3.14. That turns out to be right in the middle of where it should be in February. So
Mhm.
that should help inflation also now, because the natural gas was out of control, and that should bring with the natural gas comes down. We're already seeing it in Truflation because they have a separate line for the electricity versus natural gas, and with it coming down, it's just like that in terms of
Mhm.
the home utility bills. We've got gold up $30, 5,062, and silver up 1.14% at 81. So, are you have a theory on gold and silver?
I do not. I don't own
Okay.
them. I don't buy them. I'm a stock guy. I like stocks. I like options. Um, I like cash. So
Okay. We've got copper down 0.19, under $6 again at 590. We have got Bitcoin. I know you play a lot of Bitcoin. You got hundreds of thousands of dollars of Bitcoin, right?
oh yeah, it's my jam. You might as well call me Michael Saylor.
It's down $1,660 at 69,000, back under 70. It was already back under 70 this morning. Ethereum is managing to stay over 2,000, shockingly, but it's down 4.9% today. So the cryptocurrencies are not doing very well. And,
Yeah,
oh, go ahead.
it's. Oh, go ahead.
No, that's right.
No, yeah, I was gonna say, it's it's a weird spot right now with Bitcoin. Um, I think I said this on your channel, what maybe like 6 months ago, that I think it's just become unpopular.
You did
I
say
think people have moved
that.
on from it. It's it's like it almost feels like the people who were all into this have moved on to the betting markets instead, which is interesting. But
It is.
I think retail is done. I think most of the ETFs that were buying Bitcoin for their ETFs, I think they're underwater. MicroStrategy's underwater right now. Uh, yeah, I don't know what happens here for Bitcoin. Ethereum is different if you understand it because
Right.
Ethereum is more about the rails.
Right.
So you build off of Ethereum, but Bitcoin is less so
Right.
a a um a layer two.
Right.
So
So, oh, it went out of my head, and it was really going to be a good one too. It was good enough that I wasn't going to watch the clock, is because I wanted to hear your answer. And well, let me look here again. What was I thinking? Let's just, oh man. Anyway, the Dow up 0.22, S&P up 27, NASDAQ up 0.35, and giving us a hint that maybe the market opens well tomorrow. Um, what were you saying about Ethereum and crypto? Oh,
while
I
you
know.
think
You were
about that,
saying it was
just
you were
to
saying it was out of favor. And you were
yes,
talking about that's what it was. I remember now. Okay. So let me ask you a question, because I haven't had a chance to do this yet. It's on my
can,
list. Oh,
can I just clarify real quick?
sure.
Just I want to be clear. before I get hate in the chat.
Okay, okay.
I'm not saying that Bitcoin's not a layer two. I'm just saying, as far as a usable layer
Right,
two,
right.
Ethereum is
Is
a,
right.
is buildable.
Yeah,
So
yeah. Okay. So here's my question. Have you
yeah.
thought about the combination of using the betting markets and Grok?
Uh
Having Grok keep track of the betting markets for trends, finding out, combining bets that are being made that are, you know, that could show a convergence early on. I mean, it seems to me there's some amazing opportunities there.
Honestly, I'm one of those people that do not think that algorithms or uh, AI is going to be any good for betting for the markets. I think everything, I guess, equilibrium. Uh, for every one person trying to figure out what you're
No,
doing,
no,
there's
no.
another
That's yeah.
person.
I'm not saying that. I'm not. No, you're misunderstanding me. I'm saying the betting market. It's. I know there are people right now that are watching the betting market to get signals, but there's a lot of bets, and I'm saying to
Yeah,
use Grok to monitor the betting market to because Grok can send out agents or whatever, and you can start to get a viewpoint that is an AI viewpoint of the betting market, not using it to bet, not using it even to bet on
no,
your
I hear you.
stocks, just getting the information, getting the knowledge
Yeah, no, again, I think there's too much noise.
in the betting
You
market.
know, yeah. The founder, CEO, whoever from Kalshi was on CNBC today,
Mhm.
and Becky Quick was just on Squawk Box. Becky Quick was really interrogating him pretty well, and he was trying to make the claim that the betting markets are federally regulated, just like the markets are, and issues you'd have with insider trading are the same as what you would have, for them. And she pushed back, well, saying, well, not quite, because if a dancer for the halftime Super Bowl show knew what the first song was going to be because they have to, and they placed a bet, like you'd have no way of safeguarding that information.
Yeah,
Whereas a company, only a certain amount of people know a certain amount of information,
right,
and that how that information gets out.
right.
But how do you get out a janitor going by and like, oh, that's what it is? Because that was one of the bets, was what will be the first song, right? So how do you regulate that? How do you prevent, you know, bad actors skewing?
Right.
How do you prevent someone just telling their friend to tell their friend
Yeah,
what? I mean,
yeah.
the betting markets, I personally, I don't like them. I'm not saying they shouldn't exist. I think they're great. I do think that they are better than polls when it comes to things with politics. But in general, in general, to me, it's just gambling in a way that I don't like to gamble. I like to. And I know people think options and stocks are gambling. I don't see it that way.
Well, it can be. It can be if you go into
Well,
it with
yeah,
no,
it can be.
if you go into it with no information and you just go in.
Yeah,
My neighbor told me that Tesla options are a good buy, and you go in and you buy Tesla options with no thought
yeah,
other than the neighbor. Yeah.
yeah.
All
No
right.
strategy or
Yeah.
anything, but
Yeah. Yeah.
you, it's really difficult to have a strategy on something that you don't really have. I don't want to say statistics because you can see what the odds are, but you're hoping for. I don't know. It's messy and it gets very. It's like debating someone's religion with them, and so look, I'm all for it. If you want to go and bet in the markets, like I love them. I love that they exist. I really do. I think that they do more good than harm. In fact, I don't think they do a lot of harm at all. But I do think people are. I think there's we're sorry. I'll say it. I think things like I think the Mary Jane should be legal. I think betting markets should exist and be legal. But I think we're creating a society where there are too many people that all they're doing is hanging out, getting ripped, and just betting their money away because they don't see another option to make money.
Yeah.
And it's a weird place. And with AI, there's, people can do work, and there's two ways you can use AI. You can either just ask a question, do work for you, and take that, copy and paste, be like done, and you don't put any critical thinking. You don't scrutinize what it put out, right? So you're not using it as the tool that it should be used as. And instead, you're just like, yeah, I mean, I don't know. It said that. It knows better than I do. I just assume it's right. And next you know, the CEO is wrong, or the company acquisition was wrong, or just like a little mistake that's just off.
Mhm.
So I don't know. I guess it's just the way you approach life. But in general, I don't like regulation that keeps people from being able to do what they want to do, especially when it doesn't really harm others. I don't think people with Mary Jane are harmful for others. I don't think people betting are harmful for others. Um, I don't know. I want people to be successful and do things in a, I don't know what I'm trying to say here. I just see a lot of tailspin happening, and I don't like it.
Yeah,
I
yeah,
think
yeah.
I think we need to drive awareness to the risk. Maybe that's more so what I'm trying to say. And unfortunately, I think like social media, we're not going to really see this, and we won't have enough noise about it until 10 years down the road, when all of a sudden we see that the suicide curve for young women is just exponential, right? And you don't see that till 10 years later. It's like, oh wow, look at this trend that all of a sudden we see. It's like, oh well, yeah, young women are, at a younger age, are more, sensitive, or women are kind of nastier to each other, and they're more psychological, where a man's like, whatever, just move on. you know uh, Men are more on a physical bully, where women are psychologically bullied, and so it's a whole thing. But I just fear that it's going to take 10 years before we see the repercussions of a whole generation of men in this country have repercussions. And I don't know, I just fear for what might happen if we don't have proper warnings and caution on these things. Again, do it. I'm all for it. I
Yep,
think it
yep.
can be good fun in moderation, but yeah.
All right.
sorry,
Well,
sorry to end on a damper there.
no, I think
I
it's
just care.
always every generation has their thing. I mean, people thought radio was going to be the end of the world. People thought
Yeah.
television absolutely, going to cause degeneration. I mean, a degenerate population, and the internet. I mean, just go down the line, and I'm sure if we go back far enough, we can find stuff in the 20s. I don't know, something about the dance that they were doing was anyway. So I think we do have to be aware. You do have to keep your eye on the ball, and you do have to say, okay, pay attention, even if you overstep sometimes, and are acting like an old fogey, telling the young folks, oh, you shouldn't do that. It's somebody. There's sometimes it has to be said, even if it turns out to be okay. It's not such a bad thing to be aware and thinking outside the box about the potential problems. So I'm for
Yeah.
you. I'm for you. And then
I appreciate that.
and then I'm and then I'm going to say, Nick Gibbs, as always, it's so much fun to have you on. We always go over, and everybody watches anyway. So, by the way, sign up for, you're supposed to, Randy Kirk 77 at Gmail. You're supposed to go down there and say, yes, I'll buy your book for $2.99 before it comes out. And then I'll send you a copy probably Thursday or Friday this week. So you're going to get a pre look at the Elon Musk magic. Thank you all for watching. Thank you, Nick, and to all of you. It's been great talking to you.